Good morning, friends. My name is C.A. Gupta and I'll be your lead instructor. Today we'll be taking ledger in accounting process, and that is a very important stuff today, and hope you will enjoy the session, please. So ledger being the threshold of the entire financial reporting, very important from the examination perspective, and if you can get ledger right, it means the further elements of financial statements are bound to be right. With this note, let us initiate. Okay, accounting process. Accounting process. What does it mean actually to me? When I say accounting process, what exactly I'm trying to say? What is accounting? Accounting is a language. Accounting is a language like any other language. You know English, you know French, you know German. It is also a language. So please underline language. Used to communicate. Used to communicate the financial results and position to its various stakeholder. What is accounting? Is a language. Like any other language, this is also a language. And this language is used to communicate the financial result, which is the P&L. Position, which is the balance sheet, to various stakeholder. Who are the various stakeholder? Shareholder number 1, creditors, investors, public, government or regulatory bodies. The banks. So these are the stakeholder in my P&L and the balance sheet. If all these guys have to understand the same thing in the same sense at the same time, they need to understand a language, and that language is known as accounting. So accounting is a language used to communicate the financial results and position to the various stakeholder. Now, how the accounting process starts? Process of accounting. All right. First of all, a transaction take place. Transaction take place. Example, rent paid. Rent paid rupees 5,000 on 1st April 2016. So this is a transaction which takes place. What is the next line of action? A transaction will be journalized. You got to transfer this text into a journal entry. What is the entry, friends? Rent account debit to bank, being rent paid amounting to rupees 5,000. Once you journalize an entry, what is the next step? You got to post them into ledger. which is the today's topic. All right. Once you post them into ledger, what is the next step, guys? You will prepare a trial balance. Once the trial balance is generated, what you will do? You will prepare financial statement. When I say financial statement, what does it mean? I talk about balance sheet. I talk about profit and loss account. I talk about cash flow statement. And I talk about notes to the financial statement. When all these are bundled together and stapled, these are called financial statement. In these financial statement, who has interest, friends? The investors. Anybody who's going to invest money in your company, he will look at the financial statement first, analyze the financial statement first to ensure that whether your company is worth investing or no. The creditor, someone who is supplying raw material to you on credit, will look into the financial statement to ensure that this company is worth giving raw material on credit basis. The public, the banks, the regulatory body, who is the regulatory body? Regulatory body. When I say regulatory body, who are the regulatory body in India? SEBI, Security Exchange Board, even RBI is a regulatory body. The Institute of Chartered Accountants of India is also a regulatory body, right? So this is called process of accounting, from a transaction, how it ultimately goes into this entire box in. This entire box in is known as process of accounting. All right, so a transaction takes place. That transaction gets converted into journal first. Journal will be posted into ledger. From the ledger, I'll prepare a trial balance, and from trial balance, we'll prepare the financial statements. All right, journal. Date-wise recording. What is journal? If somebody comes to your shop and says, I came to your shop on 12th of March 2017 and I purchased this much, from where did you get the record? You straight away open the journals of that particular date. What is ledger? Ledger is a head-wise recording. What is ledger? Head-wise recording. If somebody want to know in your company how much is the rent paid during the current year, so what you'll open? You'll open the rent account. If somebody asks you how much salary has been paid by your company in the year, what you will do? You'll open a salary account. If somebody asks in your company how much money is spent on telephone bills, what you will do? You will open a telephone account. So it is a head-wise recording. It is a date-wise recording. The fundamental difference between journal and ledger, journal is of a particular transaction, and all similar transactions pertaining to one line item are recorded in one account, that is head-wise recording. So ledger is a head-wise recording, journal is a date-wise recording. Please remember this, friends. Please remember this. Now, let's talk about ledger, which is the topic of the day. After recording all the journals of the day means after recording all the journals of the day, means all the transaction gets converted into journal. What I'll do, I will classify and group them for the preparation of ledger. Alright, what is a specimen, guys? Specimen of ledger account. This is called T shape. A ledger has a T shape. Both sides 4 columns. First is the date, particular, journal folio, amount in rupees. Similarly, this side is called the debit side, this side is called the credit side, but same column, date, particular, journal folio. Sir, what is journal folio? Just a minute, beta. And amount, rupees. Sir, what is journal folio? Journal folio is nothing but the reference number. If here there will be a lot of entries in the ledger, so if you want to know this entry from which journal, so this is the cross referencing only. If I have so many entries and if I want to have journal entry of this particular entry, if I have the ledger folio, straight away I can go to that particular journal. If I have a journal folio, it is just the reference number from which journal this entry is coming here, Alright, so this is a format or the specimen of ledger account as far as the Indian accounting standards are concerned. So this is pretty simple stuff, guys. The debit side, credit side, date, particular, journal folio, amount, date, particular, journal folio, amount. This is the credit side. Whatever journal you pass during the day, they will be posted into ledger manually by the accountant, and this part has been extremely carefully explained. What I'm trying to say is, this is the specimen of the ledger, and all the journal entry will get posted into relevant ledgers. So you have a journal entry of, let's say, rent paid, telephone bill paid, salaries paid, stationery purchase, paid to creditors, plant machinery purchase, furniture purchase. You have n number of transactions during the day. Each transaction will be posted into each ledger, each journal. Each transaction will get converted into journal. Each journal will get posted into ledger. So what is ledger? It is a head-wise recording. Example, this is a rent account. So all entries, date-wise entry pertaining to rent will be posted in rent account. All the entry pertaining to salaries and wages will be posted into salary and wages account in a particular in the same format, date-wise. So what is ledger? To me, ledger is nothing but the head-wise recording of a particular line item of the trial balance. Thank you very much. So let's once again recapitulate. A transaction takes place. This transaction will be converted into journal. And you know the principle of journal? Real, nominal, personal. Debit what comes in, credit what goes out. Debit the receiver, credit the giver. Debit the loss and expenses, credit the gain and income. Based on 3 golden rule of account journals, you will be passing journal entries. Once journals are finalized, each journal will get posted into ledger. Now from here I am going to start. Posting. The process of transferring the debit and credit items from journals to classified accounts in ledger is known as posting. So the process of transferring the debit and credit item from journal to account in ledger or in directly classified into ledger is known as posting. What are the rules, friend? Rules of posting. Number 1, separate account is opened in ledger books. Separate account is opened in ledger book for each account and entries from journal to respective ledger. So in ledger in one ledger you will have rent account, salaries account. They themselves are ledgers. Salaries account, rent account, telephone bill paid account, freight out, freight in, freight out, whatever name, they are all ledgers. So from journal you will be posting into ledger. Alright. Number 2, it is a practice to use words to and by. The word to is used to post the debit side. The word to is used to post the debit side of the journal entry. Alright, beta. So whenever you say rent account debit, so when I post the debit portion, I will always use the word to in the ledger as a suffix. This was the third. Fourth, the word by is used to post the credit side of the journal entry. Let's take an example now. Example. Rent paid rupees 5,000 to Ram. Rent paid rupees 5,000 to Ram. What's the journal entry, friend? This is a transaction. What is this? A transaction. Journal entry. Rent account debit to cash. What is this? A journal. Being rent paid to Ram. Now this journal entry need to be posted into ledger. So there are two parties involved. One is the rent, one is the cash. So there are two accounts, rent account and there is a cash account. So these two are called ledger. These two are called ledgers. Okay. So rent account debit. So this is a debit side. This is a credit side. This is a debit side. This is a credit side. In rent account, debit. So when you write something on debit, you always start with to cash. To cash. In rent account, to cash. 5,000. In cash account, whenever you write something on the credit side, you always write by rent. So these two are ledgers. Rent account is a ledger, cash account is a ledger. So when you post this journal entry in the rent account, which is on the debit side, post anything, you always start with to. But when you post something on the credit side of a ledger, you always start with by. And that was the rule I was trying to explain. Now, balancing of an account. So there is a transaction which again take place. You posted them into journal entry and then in ledger. Right? And this process takes on daily. For all the transactions, let's say your shop open at 9 a.m. in the morning and your shop close at 9 p.m. in the evening. So from 9 a.m. morning to 9 p.m. evening, whatever transaction take place in the shop, each transaction will be having a separate journal entry. Right? That is the reason I say this is a journal of the day. So what is journal? This is a date-wise recording. Then each journal entry will be posted into two. For each journal, there are one debit, one credit. So each journal will affect two ledgers. In one ledger, something will be debited. In other ledger, something will be credited. To explain the debit side, use the word to. To explain the credit side, use the word by. Now, this process is happening every day. And every day so many postings are going in so many ledgers. Now here comes 31st March, which is the closing of the year. This is the 1st April. So from 1st April 2015 to 31st March 2016, you keep on posting everything into ledger, debit, credit. So on 31st March, your cycle is over, the financial cycle is over. Therefore, you got to close your ledgers. Now let's take one account only. Let's take rent account. 2 April to cash 5,000. This is the entry on 1st April. May, June, July, August, September, October, November, December, Jan, Feb and March. Assume that your rent for the whole year was 5,000 rupees. So you will keep on 5,000 rupees entry every month. Debit to cash, to cash, to cash. Like this you will pass on entries till this March. So now on 31st March you have to close the ledgers. So this is 60,000 by P&L 60,000 0. This entire 60,000 will be transferred to profit and loss account. Why? This is an expense which will appear here 60,000 in the profit and loss account. So from where this P&L balance came? It is nothing but the balancing of the ledger. When you balance the ledger, either it will appear in the profit and loss account if it is nominal in nature. If it is personal or real, where it will appear? It will appear in the balance sheet. Sir, why? Why? Can you explain to us why? Because nominal accounts are only used to calculate your profit or loss. Nominal means what? Which relates to income or expense account. So all income and expense account will finally go to P&L, right? And that's all. Next year you will have a fresh beginning. Next year you have a fresh beginning. The total 60,000 will get merged into the current year profit and loss account, and therefore the balance of the rent account on 1st April next year will be 0, and you again start paying 5,000, 5,000, 5,000 respectively. But the personal or real account, which is the property account, furniture account, RAM account, Sham account, they do not transfer to profit and loss account because they do not represent expense, and therefore they will be carried forward to the balance sheet. Okay, so this is called balancing. So when you say balancing, it has to go either to P&L or to the balance sheet. All right, friends. Let's create an illustration. To understand in more detail. Prepare a stationery account of a firm. Prepare a stationery account of firm for the year ended 31/12/2015, duly balanced from the following details. For January 1, 2015, inventory has a balance of 480. April 5th, 2015, purchase of stationery by check, 800. Underline the word check. It means it has routed through bank account. November 15, 2015, purchase of stationery on credit from 5-star Stationery Mart. How much? 1280. December 31st, inventory balance is 240. Prepare necessary ledger account. This kind of question appear in your examination files. Prepare necessary ledger account. Solution. Stationery account. In a T shape. Solution. stationery account. Always ledgers are in T form. This side is known as debit side. This side is known as credit side. So whatever you post in this area, it will start with to. Whatever you post in this area, it will start with by. So on 1/1/15, to balance brought down, opening balance 480. 5th April 15, purchase of stationery by check. What is journal entry? Stationery account debit to bank. So in stationery account to bank, what's the amount? 800. On April 5th, purchase of stationery by check. What is the entry? Stationery account debit to bank. So there are two ledger involved in this journal, stationery and bank. I'm just preparing stationery ledger. So in stationery ledger to bank, in bank by stationery. Next transaction took place on 15/11/15. Purchase of stationery on credit from 5-star Stationery Mart. What will be the entry? Stationery account debit to 5-star Stationery Mart. To 5-star Stationery Mart. 1280. That's it. No other transaction. On 31st of December 15, by balance carried down. What is the closing balance, guys? 250. So you have opening balance, you have purchase through bank, cash purchases, credit purchases, and this is the left. It means, what is this figure? Stationery consumed by P&L. Consumption is expense. How much? 2320. 2560. 2560. So, and this entry will be passed on 31st December 15. This is your consumption. You started the year with 480. This is your cash purchases, this is your credit purchases, and in the end you have only this much balances. It means this minus this is the consumption, which is an expense. Should go to P&L. Stationery consumed. On 1 April 16, to balance brought down 240. The closing stock of this year will become opening stock of next year. This is how the ledger account will be getting posting. So rule number 1, a transaction take place. Rule number 2, for each transaction prepare a journal entry. And then rule number 3, each journal entry will be posted in the relevant ledger on a date-wise order. So I have just prepared the stationery account. If you want, you can prepare a bank account. If you want, you can prepare a 5-star Stationery Mart account, and so on and so forth. Isn't it, friend? Thank you very much. Next. Okay, now let's pick up some self-examination question. Now, pick up the correct answer. From the given choice. Question number 1. The process of transferring the debit and credit items from a journal entry to the respective account in the ledger is termed as A. Posting, B. Purchase, C. Balancing of an account, D. Arithmetical accuracy test. Yes, please. What's the right answer, guys? The process of transferring the debit and credit item from a journal to the respective account is called, right answer is posting. Isn't it? This is what we told you. That each transactions will have a journal entry and each journal entry will be posted into ledger. The word is posted. Thank you. Question number 2. Question number 2. The technique of finding the net balance, the technique of finding the net balance of an account after considering the totals of both debit and credit appearing in the account is known as A. Posting, B. Purchases, C. Balancing of an account. D. Arithmetically accuracy test. Arithmetic accuracy test. Sir, can I answer this question? The right answer is balancing of an account. The technique of finding the net balance, we just saw the previous example. After considering the total of both sides, debit and credit, appearing in the ledger, is balancing. Posting is the journal entry part. Purchase nothing to do with this. Arithmetical accuracy test is trial balance. So this is the right answer, friends. Thank you, sir. Question number 3. Journals and ledger. Journal and ledger record transactions in A. Chronological order. Chronological means date wise. And analytical order respectively. Is this right? Or an analytical and chronological. Is this right? Or chronological only? D. Analytical only. The right answer is A. Why A? Journal is a date-wise recording and ledger is a head-wise recording. So therefore A is the correct choice. Do you agree with me, friends? Yes, sir. We agree with you. Journal is a date-wise recording and ledger is a head-wise recording. Question number 4. Ledger book is popularly known as A. Secondary books of account, secondary books of accounts, secondary books of accounts, B. Principal book of account, C. Subsidiary book of account, and D. None of the above. You remember, friend, that to chart a transaction take place. This transaction get journalized. This journal get posted into ledger. And this is, I told you, it is the principal books. Therefore, this is the right answer. B is the right answer. Secondary books of account, no, it is not secondary, it is not subsidiary, it is not this. So right answer is B. Next question, friends, and the last questions. Question number 5th. A very important question. At the end of accounting year, all the nominal account. What is nominal account, beta? If an account belong to income, expense, gain or loss, these are nominal accounts. At the end of accounting year, all the nominal account of the ledger are A. Balanced but not transferred to P&L account. Is it correct? Let us discuss. B. Not balanced and also not balanced and also the balance is not transferred to P&L account. Is it correct? Is it correct, brothers, friends? We will discuss. Balanced and the balance is transferred to P&L account. Is it correct? We will discuss. Last, not balanced. Not balanced, but balance is transferred to P&L account. You remember, friends, my discussion with you on ledger. A transaction take place into journals, into ledgers. When the 31st March comes, the closing of the year, each and every ledger you have opened during the current year need to be closed, need to be balanced, need to be balanced. So right choice is balance first scan. It has to be balanced. So B and D is already ruled out. Is ruled out. None of the account can stay, none of the ledger can stay unbalanced. You have to close each and every ledger you have opened during the current. How do you close? You have to balance and get the net balance, and whether that net balance will be transferred to P&L or directly to the balance sheet, that's the question to be seen. So B and D is ruled out. So what is the correct? It's a nominal account, and nominal account finally resides where? In the profit and loss account. What is nominal account? The account pertaining to income, expense, gains and losses, isn't it? So where do they go finally? In the profit and loss account. So right choice is balanced, and the balance is transferred to P&L. So this is the right choice, baby. Alright, balanced but not transferred to P&L, it is wrong. So each and every ledger, whatever you have opened during the current year, has to be balanced first. When I say balance, basically you have to find out the net balance of that ledger, and the net balance of that ledger will go where? It depends upon the nature of that ledger. If it is a nominal account, it will go to the profit and loss account. If it is a real or personal account, it will go directly to the balance sheet. So the right choice is C. A, B and D is absolutely wrong. Thank you very much. Now, so friends, with this kind of questions, I hope you have a very good clarity on what the topic we discussed in the ledger. Now, I want to give you some different dimension of the same thing. I told you at the start of the lecture that there is a transaction which takes place first. Without a transaction, no journal, no ledger, nothing. A transaction has to be taken place. A transaction take place. And what is the meaning of that transaction? Something that can be converted. That can be converted into rupee value. If something cannot be converted into rupee value for financial accounting purpose, it is not a transaction. Sir, can you take some example where you can say a transaction is there but it has no value? It has no value. I might say that, hey guys, my CEO of my company is extremely talented. This is also a statement, but this statement has no financial meaning. So this cannot be a transaction. So transaction means rent paid, purchases, sales, stationery purchase, freight in, freight out, income tax, whatever. A transaction take place that can be converted into rupee value. Now, this transaction will first get into journal. Sir, why you are stressing too much on this? And then ledger. This ledger will be closed and the final balance will be transferred to trial balance. And from this trial balance, I will prepare a financial statement. Look at the complete flow, beautiful flow. And when I say financial statement, I mean four things. The balance sheet, the P&L, the cash flow, and the notes to the accounts. Now, guys, you are very lucky. You are very lucky you are born when computers are around. When we were born, computers are not there. When we did our chartered accountancy, computers were not there. When we were doing our articleship and running through the consulting, running through the the CA program, computers were hardly there, not popular. When I was doing my articleship, my own CA firm, hardly the one single machine for typewriting. There's no computer. So everything was manual. Everything was manual. There's a transaction. With that transaction, an accountant used to prepare a journal entry, the voucher. This is called a voucher, journal voucher. A voucher is created here. So everything is manual. A voucher is created here. This voucher was given to somebody else for the posting in ledger. And from that ledger, somebody else is responsible to prepare a trial balance. What the point I'm trying to push today is everything was manual in our time. But today you are born in 21st century. You are born when ERPs are, the day you join, they ask you in the interview, guys, do you have any knowledge of Oracle? Do you have any knowledge of SAP? Do you have any knowledge of JD Edward? Do you have any knowledge of PeopleSoft? They talk about ERP, enterprise resource planning. So today in modern century, even smallest of business organization will not have manual accounting. Nobody in today's generation prepare a manual journal voucher or a post them manual into ledger. So entire, once the transaction is triggered, here is the computer. Here is the computer. The computer is sitting here. A transaction is fed in the computer. This is a computer. The computer automatically creates journal. You don't have to remember all the golden rules. The computer will automatically post them into relevant ledger. The computer at the year end will prepare a trial balance. The computer will do everything for you till here. In today's world, the entire accounting process has been automated. There's hardly any manual intervention. There's hardly any manual intervention. And therefore the today's generation of accountant are more technologically sound than us, because when we were growing up in our chartered accountancy profession, the computers were not there. So everything was manual. Everything was manual, right from picking a transaction, prepare journals. For each journal, there's a ledger folio, journal folio, ledgers, then trial balance. The entire exercise was absolutely manual, absolutely manual. But today, the moment transaction take place, when you go to any mall you go, you pick up a shirt, right? You pick up a shirt and then you go to cash counter. What they do? They pick up a scanner. Scan the barcode, isn't it? The moment they scan the barcode, the entire accounting process is over. The entire accounting process is over. The transaction is, what is the transaction? That you purchase a shirt. The moment you go to the cash counter and the cashier scan the barcode of that shirt with the barcode machine, the transaction get converted into entire accounting process. A journal take place, a ledger take place, a trial balance take place, and with the entire thing is automated today. So, but having said that, even though things are automatically, but technically, conceptually, you must be absolutely sound to ensure that you understand what computer does. Sometimes we say this is a computer generated number. I don't know. This is not the answer which can be acceptable, even though it is computer generated number, but still at the end of the day, I must technically understand how the machine is generating those numbers. I hope you have enjoyed the presentation. Thank you very much.